Welcome back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Alright, so last video we were right here. I was calling out a head and shoulders pattern. We got the final stab up, completed the right shoulder, and then like I had said, we got the immediate sell-off. Wasn't quite the $1,000 that I was expecting, but basically got about 800 bucks roughly. From where I was expecting. Got the measure move off the neckline break of our head and shoulders. Measure move would take us down basically to the 10, like 350 range roughly. We're a couple dollars short on Bitstamp, but that's acceptable measure move, at which point in time we would essentially expect to get a dead cat bounce, retracement of the portion of the dump. So, but the most important thing is we lost our diagonal uptrending support line that has basically been governing price action for the last month or so. That's obviously a substantial break. I would expect at this point in time an attempted retest up here, which we're basically getting at this time. Retest coming up and then failing to get back above that point, at which point in time we can get the completed sell-off and continue to fill out the descending broadening wedge that we've been stuck inside of. That was the exact move I was expecting. Just like I told you guys in the video, once again, everyone was extremely bullish that we were going to break out of the top. As a matter of fact, I don't even think people see this pattern that's taking place, but it's very clear that we were getting ready to sell off based on indicators, oscillators, and everything. Everybody was talking about the whole scam with the exchange getting in trouble with the SEC and talking about the Rona and how this dump was because of the exchange and this one was because of the big V for the American Prez. But the truth is, it's all on the charts ahead of time. I mean, there's no way I could have known that all of a sudden the SEC was going to release that information. There's no way I was going to know all of a sudden that an influential person was going to end up with the Rona. The fact of the matter is it's just a head and shoulders playing out. It's a Bart Simpson pattern. Essentially that's the head right there. We come down and put in a higher low, which at this point in time is, essentially bullish. Just continuing to put in. That's our third highest low, our low, and then higher low, higher low. So, I would expect us to come back up here and attempt to retest. We could even come up again and just put in a lower high than that and still be inside this pattern and still be fulfilling the exact, trend that we've been experiencing. So the fact of the matter is, you show me the chart, I will tell you the news before it happens. Everyone immediately just says, oh, let me run to the news and figure out why this happened, why that happened. It makes a lot more sense to just figure out what's going to happen ahead of time and then let everybody else, like little lemmings, running to the news and saying, oh, this is why, that's why I was wrong. I'm good at what I do. I knew it. It wasn't my fault. There's no way anyone could have known that. Well, the truth is, all you have to do is just learn how to read the charts. Learn how to read what the market is telling you, and then everybody else would just use that as their excuse, as their cop-out, why they lost, why their trade failed, why their technical analysis failed. The fact of the matter is, you're just not doing it right. Just learn how to do it the correct way, and then you won't have to worry about running to the news and what the new article is and what the new headline is and, what everybody else is telling you to do. And you'll start to realize why I'm right way more often than most people are, is because I ignore all that garbage. I look at actual fundamentals for long-term things and trends, and then I look at the actual technicals for what's going to happen on a chart. Not what I want to happen, not what I think is going to happen, but what the actual chart is telling me. It's a book. All I'm doing is just reading it out loud to you guys, and then we can just assume what the next page is going to say based on the pages that we read before it. So that's exactly what's been happening. That's exactly what I would expect to continue happening. Retest back up here, possibly as high as, this whole area here, depending on how long it takes us to float back up here over the next couple days, over the weekend, whatever. We could come all the way back up here and test it. But what I want to talk about actually in this video, it's going to be a brief one, is I'm going to make this a little bigger so it stands out very clearly exactly what I'm looking at. You see these big thick purple lines right here. That is the Fibonacci that we're paying attention to. And what that is that is the Fibonacci from right here at 11,200 down to the low of the previous sell-off, which is 10,125. So basically we sold off from here to here, and when we came back up, we would expect to put in a lower high, which we did at the 786. We attempted one more time to find strength and failed and sold off. That was the exact point that we were talking about. So we sold off from the right shoulder, and when we came down to the 236 exactly and touched it. So this is obviously the predominant fib that is governing the trend currently, the most influential short-term fib that we're paying attention to. We got the sell-off to the bottom, bottomed out, came back up to 786. So we came down to the bottom and then came all the way back up, except for the 886. That would have been like a double top. So we came almost all the way back up. So then when we sold back off, we sold off to the 236, which again, if we would have sold off any more, we would have been selling back off and putting in a double bottom. So we're trapped now inside this range. So when we come back up, what would I expect to happen? We could come back up as high as the 618, which would be one fib level lower. And then when we come back down here, I would expect us to come back down to the 382. So our next target is the 0.5, which is 10,658. After that, if we continue to the upside, the target is 10,776. Okay, so that's our potential target to the upside. From that point, if we make it up to the 618, our target will be the 0.5 at 10,655, or back down to the 382 at 10,530, which is basically where we're at now. So essentially, we would just be bouncing inside of a tightening range. Okay, and then at some point in time, one or the other is going to fail. We're either going to come back up and take out the high, or we're going to sell back off and take out the low. So depending on what the predominant trend is and what's been happening, we look at this. We're putting in a high, a lower high, and then essentially I would expect us to put in another lower high. But it has to be lower than this at 12,059 to maintain the trend. It does not have to be lower than this, because this could all just end up as one move, and then we come back up and then we put in a lower high up here. So when we topped out in this area right here, we just have to come down and put in a lower high. Now, if we come down and we take out this low right here, then we would expect this was in fact the top. So that's a high, a lower high, another lower high, and then a low, a lower low, another lower low. Or really, it would count this one, actually not that one. It would count. So we'd come down, put in the low, then the high, then the low, then the high, then the low again. So that's what we're paying attention to. At some point in time, what I suspect will happen is we will continue to get this sell-off after we retest this area, after we get smashed down by some of these key levels, and then we will come down lower, and we can find a substantial fib level that's going to be obviously like the most influential from here. But what I would expect to continue happening is, you'll see now the orange fib that we were paying attention to. The orange fib right here that we were paying attention to, that was our top from way back up here at 12,459 or 12,450, and then our bottom at 9,800. So at some point in time, we're going to take out one of those two fibs and continue in the trend either to the upside or to the downside. What we need to do is figure out which one we're going to take out. So when we put in that low, we came back up to the 0.5 and found resistance. That's your typical Charles Dow theory. We sell off, we retrace half of that sell off, and then we continue to sell off. So does that mean that we're going to sell back off now and fail? No. It means our next target to the upside will be 11,389, followed by another lower high of 11,857. And it means to the downside, if we sell back off, I would expect we've already made it back up to the 0.5. We've already come back down to the 236, failed to get above the 0.5. So we're either going to find strength here and move up, or we're going to sell back off and attempt to double bottom here. So 9,827 would be our next target. And then if that fails, we'll start looking at either fib extensions, previous support, or other Fibonacci's as well. In this case, the moving averages down here at 9,211, that's where I would expect us to head next. So I'm just going to flip this off real quick. I'm going to turn on the moving averages. I'm going to switch over to the daily time frame, and then we'll take a look at what we're looking at and why I choose those targets. So at this point in time, what would I expect to happen is we came down here and got picked up multiple times by the 89 and then continued to the upside. We broke below the 89, almost made it to the 200 exponential but failed, attempted to get back above the 50 here in green but failed again. So now I would expect that was our sell-off, that was our dead cat bounce, This is our consolidation, and then we'll see more sell-off. So when we come down now, if we double bottom, we would double bottom and test the 200 exponential at 9,900, in which case if we did find support there, we could get continuation back, find support, continuation to the upside, find a double bottom. That would show strength in the markets. But if we fail to find support on that, or we bounce that, put in another lower high and continue down, I would expect us to come down to the 200 simple. The 377 and the 528 are also our next targets. But if we break below the 200, it's going to look extremely bearish, obviously, and I would expect like massive continuation to the downside. Now, what do we need to pay attention to here? Here, we attempted to save the 8 in red and the 21 cross. We got above it, but failed to consolidate, failed to get continuation, and sold back off. We got a negative cross followed by the dump. We came up here once again, crossed the 8 above the 21, failed to save it, sold back off. We're consolidating now below it, attempted again to save it, and now here we are back below it again. So no matter what happens over the weekend price action, we could come up here, we could get a move. But the truth is, we need to pay attention to what happens with futures when it opens back up on Monday, because now that everything has closed below the 8 and the 21, it's going to drag down the moving averages at an accelerated pace as long as we're below them, and that's going to push us down to the downside. So we got the cross here, back to the upside, then we got the cross to the downside, sold off. Got the cross back here to the upside, got the cross to the downside, sold off. And then here we tried to save it one last time, couldn't even save it, so I would expect another violent sell-off. And again, the violent sell-off would take us down to the moving average double bottom here at that 9,900 range, or all the way down to the 900 simple at 9,400, which depending when we get there, this is obviously going to continue on the upside. As long as we're above it, you'll see them moving up. So any one of these previous support levels that was substantial could line up with the moving average and give us a substantial level of support, which is anywhere in this range, or again, anywhere in this range, or finally, if that fails, that's going to put us down at like the 528 and the bottom of the range at 8,775. So right now, I would expect us to come down here in the very near future and test one of these key moving averages, although we did go through the exact walkthrough of how we could get that potential move back to the upside. So there you have it, guys. Crypto Trend Trader with a quick update on Bitcoin. Keeping this one short today. Everybody enjoy your weekend, and stay safe out there. Take care of yourself and your family, and use the actual technical analysis. Stop buying lottery tickets. Stop following guys who just tell you what they want to hear. Make sure you like and subscribe my videos. I shouldn't have to tell you that, but the fact of the matter is I literally get more people that show up every day and dislike my videos before anybody else even watches it than I do get like new subscribers. So if you're watching my video, you haven't subscribed yet, go ahead, man up, grab yourself by the balls, subscribe, because your boy Crypto Trend Trader nails it every time, and it's true. It doesn't cost you anything. Show a little support, show a little love. Crypto Trend Trader, and I'm out.